I'll say something, yeah. So now, for instance, you have um man, there's nothing that has gone down. I can't even think of. Is there anything that has gone down in this country in the past 1 year? Like the price, you went there today, you say the price has actually gone down. Take your change back. Is there anything like that that has gone down in the last past few, let's say what, 6 months? I don't think there's anything. Okay. So let's just say for instance, yeah, you went to buy something. You went to buy a bottle of Coke at 400, okay? And then you got there, and then you are giving them 400 naira to purchase the bottle of Coke. And then the seller will look at you and be like, okay, Coke don't come down. Oh. Now Coke is now like 250. Okay. So now the new found what support is at 250. Why? Because it is 250 you can use in purchasing what? The Coke. Now the previous price, okay, the previous resistance level, which is at 400, is no longer valid. Okay. Now it cannot really hold on to that price. Why? Because price has actually come down. So definitely they will give you a balance. Okay. That's just what support and resistance is. Okay. If you are buying something that is in a high price, the previous price where you feel is going to hold as support is no longer holding as support. Why? Because the price has actually gone up. Okay, so now where did we stop here? Okay, where did we stop? Okay, let's continue. Just like a skilled architect designing a plan with a building with pillars and beam, market structure shows us the key support and resistance level that holds the market together. In your detective journey, you notice that the market structure consists of two essential components: highs and low. Just highs and low. You can mark this out. Highs and low are the peak of price movement, while low, okay, highs are the peak of price movement, while lows are the valleys. Okay, so let me just show you a clear example of high and low in price movement. Okay, so now this is a high point here. Okay, this is a high point here, and then this is a low point here. Okay, this is a low point here. Okay, it can simply be seen as peak and valley, or top and bottom, or top and bottom. Okay, so that is just what it is. Okay, so highs are the peak of price movements, while lows are the valleys. By connecting these highs and low, you create trend lines, which serves as the foundation for market structure. Okay, so now let's look at what the trend line is. Let me bring out a new chart. Okay, let me bring out a new chart. Yeah. So now, like what they said here is that connecting highs and low. Remember, this is a high here. This is another high here. This is another high here. This is another high here. Okay, this is a low. This is a low. This is a low. Okay, so when you connect the highs together, you have something like this. Okay, I'm able to connect this high point to this high point here and down to this high point here. Okay, so now since this thing is actually going to the downside, you can see that it's pointing downwards. Okay, it's going down. All right, since it's actually going down, it can be seen that this market is in a in a downtrend. Okay, so now this market can simply be seen as a market that is in a downtrend. And then when you are able to connect the bottoms together, just like here, you're able to connect the bottom A, or let me even do this inner trend here first. You're able to connect this trend here, bottom A to bottom B, down to bottom C. You have what? An uptrend. Why? Because you can see now that the bottoms are connected. If I'm even to connect this bottom here now, okay, I can see now that the bottoms are still pointing what? Down. They are not pointing up, they are pointing down. But rather, this one here, the bottom here, this is the top. Okay, remember, this is the bottom. The bottom here are pointing to the upside. Okay, which simply shows us that what we are in an uptrend. Okay, so that is just a simple way to identify what trends. Okay, so let's continue. Okay, by connecting the highs and lows, you create trend line, which serves as the foundation for the market structure. As you further investigate, you will find that the market structure comes in different forms. Sometimes you stumble upon a trend where higher highs and higher lows are form a staircase leading upwards. In other case, you encounter a downtrend where with lower highs and lower lows, sellers dominate the market, pushing price lower. Each high point in the trend remains lower than the previous one, descending like a mysterious spiral staircase. Other times, market moves sideways in a range where price movement fluctuates within horizontal ranges with no clear overall trend. Traders encounter resistance at the upper boundary of the range and support at the lower boundary. Don't worry, this is too much English. Let's go over to the chart, man. Okay, so now in this whole price movement here, we can identify the different market conditions. Okay, so now I said one, you need to identify what price is creating, what higher highs, higher lows. You see, it's going up, 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 up. It's going up, 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 up. Okay, you can see it here. All right. Now, in this area here, we have what the market is going sideways. It's not creating new higher highs, neither is it creating what new higher low. Rather, what is happening here is actually moving in a sideways direction. Now, this is the other side of it here. Okay, so I'm going to change this to, let me use black, and then this one also here to black. And then since we are in a bullish phase, we are going to be blue. Okay, so this way you can identify this different market trend. Okay, you can identify this different market trend this way. Okay, so it's best, let me open a new chart. I don't want all these lines to confuse you. Okay, I don't want all these lines to confuse you. All right, so let me even hide this guy here. Okay, so it's as fresh as this. Where is that price action? Okay, this is it. Okay, so we have this bottom here. Okay, and then we had the breakout here. Okay, connecting the bottoms, and then we had the breakout here. And then since we are up, we're going to use blue. And then for a sideways market movement, which is this area here, we didn't have price creating highs. Okay, rather what was happening, price was actually creating equal highs. Okay, it was just in between this area here. Okay, majorly this area, this side. Okay, so this is the way price was actually moving. Okay, it was not creating higher highs and higher lows in this space. Rather, it was creating equal lows, double bottom, try to create similar double top here and stuff like that. Okay, and then in this situation here, we have what do we have here? Who can tell me what we have here? What do we have here? What is going on here? Who can tell me what is going on here? What's going on in this price movement here? Anyone in the comment section can tell me what's going on in that price movement here. We can see that price, we can connect the tops together. Okay, we can see that we can connect the tops together. Okay, you say retracement, not necessarily retracement. Okay, we can see a downtrend. Okay, we are experiencing a downtrend. We are currently trying to identify trends here. Okay, we are currently trying to identify trends here. So this is an uptrend where we see the market push upwards. And then this is a sideways trend where we see the market is not creating newer highs, rather it's actually creating equal highs and equal lows. And then this is a downtrend where we see the market creating lower highs and lower lows. Okay, so you're correct, Sunny, you're correct, Dre. Okay, so this is the structure of a trend. Please mute yourself. Thank you very much. Okay, so this is the structure of the trend. This is an uptrend. The market will be creating a series of higher highs, higher lows, higher highs, higher lows. And then for a downtrend, the market will be creating a series of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Okay, so this is what you want to see in the market. And then for a sideways trend, the market is creating similar equal highs and what equal lows. Okay, it's not going up, it's not coming down, it's just there. Market just do where it did. Okay, until we have what a breakout with a continuation. Okay, but there sometimes you not see that retest immediately. Okay, so these are different market phases we have, and then the choppy market is very, very crazy. Okay, it's very, very crazy, and you see choppiness this way. It's a very crazy market structure. Okay, it's not respecting any high. It's the previous high is creating to violate the low, now violate the high again, violate. So it's crazy. Okay, in a choppy market, you don't want to be present. If I've not seen anybody that successfully trades choppy market. Okay, you will lose your account, you will lose money. Okay, so even in a trendy market itself, you still lose money. Then talk less of choppy market. You just chop your money. All right, so let's forge ahead. All right, I believe you understand what I've said so far. If you understand, just drop 111 in the chat section so that I know that you are following. Okay, just drop 111 in the chat section. Then we continue from there. All right, I think 3 people understand. Out of 9, 3 people out of 9. Not that fair, not that fair, not that fair, not that fair. 3 people out of 9. Okay, 4 people. Let's see if we can get to third. 5 people, 6. Okay, 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 okay. Let's go. All right. So if you have any question, remember you ask it in the chat section. Yeah, 111. You've covered for every other person. That's fine. If you have any question, you can drop it in the chat section. I will attend to them. Okay, or if you feel it's something that we can chat on WhatsApp, you can also drop a message on WhatsApp. Okay, so let's go. Okay, so I've showed you guys a clear illustration of an uptrend. I've showed you guys a clear illustration of a downtrend. I've showed you guys a clear illustration of a sideways trend. Okay, so an uptrend or a bullish market, they are still the same thing, so you don't get it confused. A downtrend and a bearish market is still the same thing. A ranging market and a sideways market is still the same thing. Okay, so understanding market structure is crucial because it helps trader identify potential entry and exit points for trades. For example, in an uptrend, trader may look for buying opportunities near support levels, higher lows. In a downtrend, sellers look for opportunities near resistance levels, lower highs might be sought. Okay, so what this simply means is that if you can identify that the market is going up, okay, you don't want to be selling when the market is going up. Trust me, you will not last. Okay, you will not last. That's why I have this, my EMA. Okay, Now I watch out for EMA crossover. Once I see that on the 30-minute time frame, this is my strategy. I'm already telling you beforehand, but you can still pay attention. Okay, once I see that my moving average has crossed over, okay, and then I see a shift in market structure, I can have about 70% guarantee that price will continue in that direction. Okay, if I see a shift in market structure, I can have about 70% guarantee that price will continue in that direction. Okay, so these are the ways I capitalize market movement. Okay, if I want to buy, I'll wait for price action to come back to the upside. Okay, my moving average price must be above my moving average if I'm buying, and then price must be below my moving average if I'm selling. So these are just basic things I just have to put in place. Okay, these are basic things that I just have to, and remember, the market will not leave you. If the market is leaving you, know that okay, that setup has gone. Don't try and chase the market. Okay, if you see another opportunity, you can enter. It's quite understandable. But if you don't see, don't try and force it. Okay, the moment you force it, you ignore your rules and what is guiding you in the market, and then if it works, fortunately that particular one work, you want to try it again, and that is where the market will eat you raw. Okay, so just relax and then enjoy the flow of the market. If you miss a trade, wait for the next trade. Don't jump. And then even if you must jump, don't take your regular risk. Break it down. Okay, break your risk down. All right. If you know that okay, you missed a trade and it's by fire by force that you jump into the trade that day, reduce your risk. Okay, because one thing you need to know is that first of all, the market is already against you. Why? Because you did not enter at the right time. So you don't have to use if you are risking 1% regularly, you can bump it down to 0.5 or 0.25 to then make up just small gains. And then the next day you try as much as possible to come in early so you can join the move. Okay, so let's see. Let's see here. So buying opportunities will be present from where we can see potential higher lows. Okay, where we can see potential higher lows, which are this area here, 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 this area here. They are good areas for buys. Okay, they are good areas for buys. And then if you want to sell, you want to sell in potential lower highs. Okay, this area here, this area here, this area here, this area here, they are potential areas for sales. Okay, so that's just what it simply means. Okay, if you are buying, buy from potential higher lows, and then if you are selling, sell from potential lower highs. Okay, so let's continue. Market structure is often combined with other technical analysis tools such as price action, patterns, and indicators to provide comprehensive view. Okay, someone is asking what EMA number do you use? Okay, I use 21 period moving average. Okay, I use 21 period moving average. All right. EMA, yes, I use the EMA. Okay, 21 period moving average. I will show you how to set it up on your chart. It's very simple and straightforward. So let's continue. Another question. Okay. So such as price action patterns and indicators to provide a comprehensive view of the market. By analyzing market structure, trader gain insight into the prevailing market sentiment and can make more informed trading decisions. Okay, so after understanding the different type of trend, we need to take a deep dive into understanding and identifying structure in a more advanced way. This is where we begin to treat the concept of market break of structure, market change of character, and also shift in market structure. Okay, for us to carefully understand this, we need to have understood the basic market structure we treated above. Bullish market, which means uptrend, bearish market, which means downtrend, and ranging market, which also is a sideways or consolidating market, which is a market that is either bullish or bearish. It ranges in a zone. With this understanding, let us move to more advanced market structure. Okay, so now you just have to be very, very patient to really understand this. Okay, you just have to be very, very patient because we are going into the main deal of first trading. Okay, all those ones now we're doing yesterday and earlier today were just the baby aspect of trading. Okay, now this is where the real deal starts. Okay, so break of structure. Remember what I said earlier? I said a structure should actually, for a market structure, it should actually be organized. Okay, an organization of a structure is, this is an organized structure. Okay, it's going up, it's simply organized. Okay, now when you have a break of that organization, okay, this is the last higher low for an uptrend. Okay, the moment you have a break of that organization, what happens? We now have a shift in market structure. Okay, so let's read through. Okay, so break of structure, also seen as BOS. So you must have been seeing some chart analysis where you see BOS, CHOCH, SMS, BBC, OPC, PDP, APC, CMC, OQMLM. All those things are simple things. I added APC and PDP. They are not part of forex trading. Before you go and be looking for APC in the market, they will just give you a down payment for a roasted corn. All right, so let's continue. All right, so break of structure is used to describe a significant price movement that surpasses a crucial level of support or resistance on a chart. This level is usually predetermined by institutional traders and other significant investors who established it as a crucial threshold for market movement. I know this is far-fetched, but let me confusingly simplify it for you. For easy understanding, we are not taking the concept from a literal perspective. Okay. And that is why we will start like this. A break of structure is a continuation of trend when price makes a new higher high in an uptrend or a lower low in a downtrend. You might want to read this again slowly with an illustration below. You understand what we are talking about. Okay, so now this is where the key point is. A break of structure, okay, is a continuation part of market structure. Okay, when price makes new higher high. Okay, so now this, like I said, here is a shift. So now what can we identify as a break of structure? Now this is a high. Okay, oh, it's not this one I'm supposed to use. This is a high. Remember, this is a peak, and now this is another peak. Okay, this is the bottom here. Okay, so the moment price breaks through, this is a structural high. Okay, this is a structural high. The moment price breaks through it, this is what? A BOS. So this is where you see most of all those traders, they'll mark it out as BOS. Okay, so this is how you see their explanation, BOS. Okay, so now you can see all those things that you see most traders do. You are seeing them now live. Okay, so now BOS, this is another BOS because it broke structure and is in a continuation, is in an organized manner, is pushing in an organized manner. This is another BOS. Okay, so this is BOS. This is a break of structure giving us this high. From here, we had the retracement, a short downtrend. that gave us another break of structure. This is it that gave us this new high. And then we had another break of structure that gave us this new high. So let's interpret that in the price chart. Okay, so I will use this. Okay, this is the shift after, because the market was going down and then we had the shift somewhere around here. Okay, we had our shift somewhere around here. Okay, which we'll also be talking about shortly. Okay, so now this is the high point here. Okay, so now let me mark it out as BOS. Okay, and then let me extend it a bit. Okay, now you can see now from this low point, let me mark this as low. Okay, so now from this low point here, we had price breakthrough and close. Remember, it's very important that price close. Let me use another, because of this, all these gaps you are seeing on this price chart may be confusing to you. AUDJPY. I don't often trade this pair, so I can use this to explain better. Okay, don't get confused. They are all the same thing. Okay, they are all the same thing. Even GBP, JPY. Okay, this is British pounds against the US dollar. All of them, they are structurally printed. Okay, they are structurally printed. All right, so now let's see. Well, let's see what we have here. Remember, let's start from this low point. Let me just show you all these things I'm showing you are things I use for in my day-to-day trading. Okay, so from this low point here, this was a bearish move, and then we had the shift in market structure. So this becomes the new high. Okay, let me write BOS, and then I will show you, I will still explain to you what I look out for to validate a high point or a low point. Okay, so just be patient. And then this is a low. Okay, so this is BOS. So from this low here, we had what? This high. Okay, so now this becomes a new high, and now this becomes a new low. As long as price doesn't break below this low, we are bullish. Okay, these are things you need to understand. Okay, I'll still explain them to you by tomorrow when we are doing our live analysis. Yeah, so from this low point here, okay, let me duplicate it so that we can track them easily. Okay, so from this low point here, we had another BOS. Okay, that gave us what? This high. Okay, let me zoom in so that you can see it clearly. Okay, from this low point here, we had this high, which gave us this BOS and gave us this high. And then from this low point, we had what? A break in market structure. You can see it. Price closed above, giving us what? This high. So the next time, the next level that we break, the next level that will take out this high is breaking structure. So where did that level come from? It came from this area here. So from this area here, we broke structure. Okay, so after this section, we're not joining again, so we'll just take our time, and tomorrow we can finish up what we started, because we've already started touching part of tomorrow's section. Okay, so from this low point, we had a break of the structure. Okay, so this is what BOS is all about. Okay, so then from this low point here, we broke the structure here. Now this becomes what? A new high. Okay, and then this becomes what? A new low. Okay, so you can see how religiously you just have to follow price. Then from this low, we had what? This high. Okay, so now watch out. The moment, okay, we had this high. So now the moment we had a shift in market structure, now the shift in market structure, which is what we're going to talk about in the next one. So now, I've shown you a break of market structure to the bullish side. The same thing is going to happen to the bearish side. Okay, let's see a bearish scenario. I'm not going to really explain the way I explained this bullish one because I believe you all understand. Uh, let's see bearish scenario. This is also a bearish scenario here, but let's see from this area here, we broke to this high. Given all this high from this low point, we gave this high. From this low point here, price pushed all the way down here. And then you see the moment we had this shift in structure, which is what we are going to talk about. So the assignment you are going to have is your assignment is going to be identifying market structures. Okay, you're going to identify break of structure, you're going to identify shift in structure, and then you're going to identify what again shift in market structure, change of character. Okay, so after we explain all this, let's see if we can use 7 minutes to explain them. Then that's going to be your assignment. To submit them by tomorrow before the next section. Then we'll treat them and then we'll go from there. Okay, note, support levels are created as a market turns higher. So if a market is moving lower, for example, and it then changes direction and begin moving higher, it's either it has created a level of support or bounced off a previous existing support level. Okay, so what this simply means is that if the market was going lower before, okay, and then suddenly push up, it's either is bouncing off a particular level or it is breaking a particular level. Okay, so it says here it has created a level of support or bounces off a previous existing support level. Okay, so resistance level are created as the market turns lower. So if the market is moving lower, for example, and then changes direction and begin if the market is moving higher and then changes direction and begin moving lower, it is clear it's either it has created a level of resistance or bounced off a previous existing level of resistance. Okay, so I'm going to also post this one on the Telegram group. Let me see. For those that are not on the Telegram group, who want to join. So now, what is a change of character? A change of character, as the name implies, is when price breaks the previous established pattern and is a sign of potential reversal. Okay, a change of character, character. Remember, market structure is organized in a characterized way. Okay, so when we have a change of character, it simply means that what was going up before now want to start going down. Do you understand me? Or what is going down want to start going up. Okay, so for example, a change of character is when price makes a lower low after being in an uptrend, or when price makes a higher high after being in a downtrend. That's just simple. Okay, it's just very simple. I think that should be the simplest thing you will be seeing here. Okay, so let's identify a change of character. So this market is majorly trending up. Okay, so now this is a low. Okay, this is a lower low. Okay, so if I mark it out, the moment price stop creating, because you can see here, this was supposed to be a low point that will take out this low here. Okay, but guess what? It didn't happen. All right. So now we can see that since the market wasn't able to take out this low, it now gave us a high. You can see after which we now had this uptrend printing. Do you understand me? We now had this uptrend printing. So now the moment price is failing to create new lower low in a downtrend and start creating higher highs, we now have a change of character. Okay, so now the moment price breaks that already the first high that was created in a higher high. Now look at this. This was supposed to be uh a lower low. Okay, and now price did not create that lower low, but rather it gave us what? This high. Okay, now this is where the BOS starts forming. This is where the BOS starts forming, from this level here. This is just a change of character. This level here, this move here, this candle, this low that gave us this high is a change of character low. Okay, it's not a break of market structure low, it's a change of character low. Okay, so there are different type of lows, okay, which over time we will be looking into those ones. All right, so now this is a break of market structure low. Okay, this is a BOS low. All right, give us this high. From this low here we had this high, from this low here we had this high, and so we had the uptrend. Now we now have what? From this area here we now had what? A change of character, because from here price gave us this uptrend. All of a sudden we had this down push here. Okay, and giving us this low. Then from this low here we had this low, and now price did what? Change character to an uptrend, and then all of a sudden change character back down to a downtrend. So that's why you need to observe change of characters very, very well, because in most cases change of character may be a new trend, okay, because it's a trend reversal approach. When you have a change of character, it simply means the trend is most likely to change. Okay, so change of character. Support. Think of a support as a floor beneath the price of a currency pair. It's a price level where the market has historically shown a strong tendency to stop falling and start rising again. Traders believe that at support level, there is enough buying interest to counter-react selling pressure, preventing the price from going further lower. Retracement, on the other hand, or resistance, sorry, on the other hand, resistance is like a ceiling above the price. It's a price level where the market has historically struggled to break above. Traders believe that at resistance level, there is enough selling interest to counter-react buying pressure, preventing the price from going higher. Imagine support and resistance as key turning points on the chart. Support is where the price bounces back up. Resistance is where the price gets pushed back down. Okay, so this is where we're going to stop for today, and then tomorrow we'll continue. Okay, so let's see. We don't really have much time, so let me just show you what this is all about. Okay, so support, like they say, resistance is like a ceiling, and then support is like a floor. Okay, so price can bounce in between these levels here. Okay, price can bounce in. This is what consists of a ranging market. When you have buying pressure from support and then selling pressure from resistance to push price down. Okay, so this is what forms resistance. And then on an uptrend, we have support levels. This meeting can end anytime. So good night already, but let me just quickly explain this. So this is resistance levels, and this is for an uptrend. Okay, these are different support and resistance levels. So what price does is that it bounces off these levels this way. Okay, it goes up